usually when IPOs happen in strong markets like this, it reminds me a lot of the late 90s. And I was trading a lot then. I was at Goldman as well then. And what you found is after the IPO, it would launch and it would be choppy as hell for a while. Sometimes it would sell off quite sharply. Facebook sold off really sharply as people took profits, repositioned. Now, don't forget, a lot of people have front run this ETF. So they're going to want to unwind. And many of those are going to switch to ETH that I've talked about before. They think, rightly so, that ETH is the most likely candidate for the next ETF. And if Bitcoin went up 100% because of this ETF, ETH will go up 300% because it's less liquid, put the same amount of money in.
In the immediate aftermath of this week's historic approval and listing of 10 spot Bitcoin ETFs, excitement has spread to the Ethereum community that a spot Ethereum ETF could now be imminent. But for those concerned about too much celebration in 1 week, worry not. Securities and Exchange Commission, SEC. Chair Gary Gensler is always there to rain on the parade. In an interview with CNBC yesterday, Gensler gave very little encouragement when asked if a spot in Ethereum ETF is poised to gain SEC approval anytime soon. For years, Gensler has repeatedly maintained that Bitcoin is the only cryptocurrency he views as certainly being a commodity, meaning one therefore outside the SEC's purview. While the SEC has yet to make any official pronouncements about Ethereum's security status, the agency has previously signaled in legal filings that it views all Ethereum transactions as falling under its jurisdiction. Raoul in this video reviews the just-concluded ETF approval and the events that followed. He also talks about the potential of an Ethereum ETF, pointing out that it would even perform better than a Bitcoin ETF. Let us now get into the video as you watch. Make sure to hit the like button, subscribe, and drop your comments.
I've explained it before. How I think of this is in two terms. One is anybody who was an investor in Bitcoin in 2011-12 was like a Series A investor. 2013 cycle, maybe Series B, 2015, 16, Series C, the last cycle, Series D, we've just IPO'd it. And usually when IPOs happen in strong markets like this, it reminds me a lot of the late 90s. And I was trading a lot then. I was at Goldman as well then. And what you found is after the IPO, it would launch and it would be choppy as hell for a while. Sometimes it would sell off quite sharply. Facebook sold off really sharply as people took profits, repositioned. Now, don't forget, a lot of people have front run this ETF. So they're going to want to unwind. And many of those are going to switch to ETH that I've talked about before. They think, rightly so, that ETH is the most likely candidate for the next ETF. And if Bitcoin went up 100% because of this ETF, ETH will go up 300% because it's less liquid, put the same amount of money in. There's a lot of people unwinding the GBTC arbitrage, closing that position, selling out, moving into a different ETF. There's a lot of shenanigans going on. And you can see that with the net flows. There was 4.5 billion or whatever of total flows. The net flows are much smaller, 700 million or so. It's still the biggest ever ETF launches in history as the series, but it's all to play for. And I want you to understand how this works is, okay, all of the pre-orders have now been filled. That was all of these ETF providers going to all of their clients, begging them, you need to do this, you need to do this, you need to do this. Everyone's done that. Sure, there'll be some follow-on next week. A lot of the GBTC guys are unwinding, and that will go, some will wait a few days, see if the market is stronger, whatever. So that goes on for a while. You've then taken forward or brought forward a lot of demand. By the end of it, maybe it's 1 billion, maybe it's 2 billion of demand you'll have brought forward. So then who's the buyer? You've got the people who front ran this who want to sell. So you're going to see volatility. And I've always reminded you guys in the do not fuck it up mantra, part of that is expect 30, 35% pullbacks. Could be less, but just expect them. And that often happens when you get to this kind of 61.8% Fibonacci level in the first leg of the bull run. It often corrects sharply. People get washed out, leverage is cleared out, and then the real run starts. And the real run is the run to all-time highs and beyond. That usually starts around the halving. So I'm guessing there's maybe a month or two of chop. And chop in crypto markets is like down 30%. It's just sideways chop. So just be careful out there. I could be wrong, could keep sailing higher. But, it just feels like it's trading a bit heavy. And even if it does as a spurt higher, I don't think it makes much progress yet.
If the SEC were to view Ethereum as a security, that would likely make the regulator even more hostile to a spot Ethereum ETF than it was to a Bitcoin ETF, which it previously rejected for years on end, before essentially being forced to do so by a federal appeals court. That same court decision, though, might also force the SEC to approve a spot Ethereum ETF. As Gensler himself noted this week in his statement regarding the Bitcoin ETF approval, the circumstances surrounding crypto ETFs have changed due to legal judgments. The SEC was ordered to review Grayscale's Bitcoin ETF application in October because the judges found it could not arbitrarily deny a spot Bitcoin ETF after approving a Bitcoin futures ETF application. The SEC already approved an Ethereum futures ETF that same month, potentially setting up a parallel legal scenario.
But really, this is a trade deal between fiat world and crypto land. And it's a trade deal because the capital that's flowing into crypto land is not permanent residency. These are not migrants. If you remember, population growth, GDP growth is population growth plus productivity growth plus debt growth. This is not population growth coming into crypto land. That has to be new wallets and actual self-custody or on crypto exchanges and all of that stuff. This is a trade deal to allow TradFi Land, our RAA in Cincinnati, to get his clients across into this new world that has higher rates of return. The best example of this I can give you is China entering the WTO. That was a classic example of opening up a market that had much higher rates of return and absorbed huge amounts of capital over time. And I think crypto will absorb huge amounts of capital over time. But remember, these people are tourists. This is not even foreign direct investment, FDI. That would be VC money. What this is speculative hot money flows into this new economy. And one day it'll wash out again too. So be careful of that. While we want to encourage them, while it's going to help our ecosystem grow, while it's going to create more capital, more opportunities, it'll move your bag as well. This is not permanent residency in our world. And so, yes, we welcome them with open arms, but remember, what we really want is a new financial system being built. Now, interestingly, you saw Larry Fink talking today on CNBC, I think it was. Not that I watch CNBC, but there was a clip. And he was talking about, well, this is just the start, because what we actually want to do is tokenize the entire financial industry. And he's dead right. Firms like BlackRock, Franklin Templeton, Fidelity, these are currently, you think of these as fiat world companies that have set up offices in crypto land, much like many businesses like Apple set up in China. But what Larry's talking about is the migration, the eventual migration of the financial system into crypto land, which was my core thesis when I first found Bitcoin in 2012, and has remained my thesis of where this is all going, amongst many of the other opportunities. So it's really interesting when you think of it in economic terms. These are economies. This is a digital economy of crypto land that has other states within it, Bitcoin, Ethereum, Solana, whatever it may be. So that becomes very interesting. And you can think of, even within that, you've got, interoperable systems, stuff like whether it's Polkadot or Quant or a whole bunch of these things allow, or Chainlink, interoperability. That's the travel, the border crossing from going from one of these nation states to another. We've got immigration, which is us opening wallets. We've got FDI, which is VC. We've got trade deals, which is hot money flows chasing opportunities within a country, which is the ETF. We have a monetary system. We have interest rate systems, which is the yields. We have a collateral system. You can call that Bitcoin. You could even call ETH collateral within the system because it's used within borrowing and lending. We've got asset markets, which is like NFTs. So, and there's a lot more. I've written extensively about this in Global Macro Investor, and also in Real Vision Pro Macro, I've talked about this at depth too. This is a new digital economy, and it's an emerging market, and it's the fastest growing market we've ever seen.
Larry Fink, the CEO of BlackRock, backed the notion of an Ethereum exchange-traded fund, ETF, a day after the much-anticipated Bitcoin ETF went live. "I see value in having an Ethereum ETF," Fink said in an interview with CNBC on Friday. "These are just stepping stones towards tokenization, and I do believe this is where we're going to be going." BlackRock's iShares Bitcoin Trust was one of the several such products to make its trading debut in the U.S. on Thursday after the Securities and Exchange Commission, SEC, approved the funds on Wednesday. IBIT accounted for roughly $1 billion of the total $4.6 billion of trading volume that the ETFs collectively saw. The asset management giant may now be looking to list an equivalent product for the native token of the Ethereum blockchain as part of its ongoing journey toward tokenization. Tokenization is the term for representing assets, real word or digital, in the form of a token on the blockchain. Fink believes tokenization can eliminate matters related to money laundering and other corruption. Fink also said he did not see cryptocurrency as a currency, but as an asset class, referring specifically to Bitcoin as an asset class that protects you against fears of geopolitical risk. It's no different than what gold represented over thousands of years, he said. Unlike gold, we're almost at the ceiling of the amount of Bitcoin that can be created. According to Raoul, this has been his thesis from the get-go, and he is excited that more people are beginning to see the vision for the space. Bitcoin dropped below $42,000 on Friday, plunging almost 10%, as the euphoria over the Bitcoin ETFs approved this week gave way to a massive rout. Bitcoin had been as high as $46,000 earlier Friday, and surged to a two-year high of $49,000 on Thursday when Bitcoin ETFs began trading in the US. But the heady prices didn't last long. The declines happened a day after spot Bitcoin exchange-traded funds, ETFs, began trading, marking a significant milestone for the industry. Bitcoin ETFs are traditional financial vehicles that may give retail and institutional investors alike easier exposure to Bitcoin's price. Friday's price declines may not be a surprise. Research firm CryptoQuant predicted last month that Bitcoin would fall to as low as $32,000 in the next month after an ETF approval, being a sell the news event. Do you think Bitcoin will go as low as $32,000? Or will the rally pick up from where it stopped? Let's hear your thoughts and predictions in the comment section below. Don't forget to hit the like button, subscribe, and turn on notifications. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform, Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.